This is the #1 mining conference or battery minerals conference in the world today. And with that, I'd like to introduce our first speaker, Matt Dusci. Matt is Chief Operating Officer of IGO Ltd.
Thank you, Liam, for that introduction. Trust me, I don't have a speechwriter, so I'll make sure I'll go for where it goes. It's exciting times here for us, isn't it, in the battery mineral sector. I mean, in terms of how quickly this sector has grown, it really is amazing. And it's amazing to think that we're really at the start of this transition. We collectively, as an industry, are an important part of this supply chain. A supply chain which is critical for clean energy metals as we transition to a low emission society. A supply chain which is also limited by natural resources and into that supply chain. I look forward to talking a little bit about the IGO journey as we transition our company to clean energy metals. As an introduction to IGO, we're a leading diversified clean energy metals company with a market capitalisation of $11 billion. We produce across a suite of metals, including lithium, nickel, copper and cobalt. We're developing an integrated business, linking both upstream and downstream. We're a purpose-led organisation, with our purpose being making a difference. Our strategy is to be a globally relevant supplier of clean energy metals critical for this transition that we all need to go on. We'll do this by producing a diverse suite of products made ethically, safely and sustainably. We'll also have customer focus as we build an integrated business, ensuring that we have connectivity ultimately to the customer. And we'll do this also being carbon neutral. This is really underpinned by our people who are bold, passionate, fearless and fun, a smarter, kinder, more innovative team. As part of this presentation, I'll talk to three key themes, being our market, our journey the company's been on, and also our operations. Before I start, I just want to address the Western Areas transaction. There's limited I can talk about this. As you're aware, we proposed a transaction in December. Transaction was a board-approved recommendation scheme of arrangement for $3.36 per share. There's no doubt the volatility, the short-term volatility that we've seen in the nickel market has made this transaction complex and challenging. However, we have a view, and I'll talk a little bit about the market coming up. We have a view that it is a short-term volatility and we haven't seen fundamental change to the medium and long-term nickel market. As we stated in a release yesterday, IGO is considering our options. However, we're not guaranteeing the scheme may not proceed. Ultimately, as a company, we are focused on value and we'll also remain disciplined on M&A. Just talk a little bit about overview to the market. What we're seeing is an acceleration of EVs. We're expecting to see penetration rates, that is new EVs into the global EV market, around about 20 to 25% by 2025. This grows to around about 40 to 60% by 2030. What we know is this growth isn't linear. It's more like an S-curve. What's driving this growth comes down to three fundamental things, which is cost and technology. It comes down to the consumer and the consumer choices and what they have. And it also comes down to environmental regulations. A fundamental constraint potentially on this growth is the raw materials in the battery cell. To reach forecast growth on EVs by 2030, the EV battery supply sector needs to grow by about 12 times. It's an amazing level of growth. This growth transitions into a groundswell of demand, and we see this groundswell of demand in the lithium sector. What we're seeing is demand outstripping supply and creating a deficit around about 1,200 tonnes of lithium carbonate metal by 2030. We also know the complexity of bringing on new supply and also the time frames and constraints of bringing in new supply, whether that's in funding, environmental permits, whether that's in construction, commissioning or ramp up. It all comes with its challenges of meeting this demand. But it's a challenge that the industry has to meet. So it's not about which deposit, which style of deposit, where that deposit is. It is actually a challenge for the industry actually to meet this demand requirement. Nickel market, a little bit more complex, feeding both the EV battery storage, but also the stainless steel. What we understand from the nickel market is that we expect to see a supply constraint from about 2025, and that grows to around about 600,000 tonnes by 2030. There's no doubt that what we've seen in the short term is volatility. This volatility caused by the war in Ukraine and also caused by a major nickel producer having a significant short position on the LME. We expect nickel market to revert back to normal. And that's what we also see in other products, nickel products and nickel markets, where we haven't seen the same sort of volatility that we have seen in the LME. Just an overview of our journey and where we've come from as a company. We listed 20 years ago. It's a 20-year anniversary for IGO this year. Listed as an exploration company with a $3 million market cap. We grew the organisation into a diversified miner. It was about 5 years ago that we changed our strategy. And that strategy was to ensure that we were 100% aligned to clean energy metals. As a result of that strategy, we sold our Tropicana gold mine interest and also acquired an interest in a joint venture with Tianqi, creating a global joint venture on lithium. As we transformed our portfolio and strategy, we also have transformed our culture. We've transformed the way we do ESG and sustainability, and ultimately we've also transformed our financial strengths. In terms of people and culture, we recognise that our number one assets are our people. We're focused on attracting, developing and retaining our people. Our 3 months turnover rate for IGO sits around about 10%. Which is incredibly low considering the tightness of the market. We have a focus on gender and gender diversity with about 27% female participation. And probably one of the things we're most proud about is our engagement. Our employee engagement sits around about 81%. 89% of our employees say they have pride working for us as a company. The other area that we transformed is sustainability. And we get recognised this externally. We get it recognised through the Dow Jones Sustainability Yearbook consistently. To give you context, in the Sustainability Yearbook, we are one of 15 global mining and metal companies to be recognised for their work we're doing in the sustainability space. This translates into what we do in terms of our reduction on emissions and how we look at emissions across our portfolio. It was in 2016 we started this journey where we commenced our participation in the climate change initiatives. 2019 we built our first solar farm at Nova. This year we're committing to an additional solar farm at Nova and additional battery storage at Nova. Be one of the first mines where we will be able to run engines off, where we're running 100% renewables for about 8 to 9 hours a day over summer and autumn. In about 4 years, we've reduced our emissions by 30% already at Nova as we continue to drive our emission portfolio down. A little bit on our assets, talk to Nova. It's producing both nickel, copper and cobalt, located about 180 kilometres east of Norseman. Our guidance for FY22, we're sitting around about 25 to 27,000 tonnes of nickel, forecast to produce 11,500 to 12,500 tonnes of copper, 900 to 1,000 tonnes of cobalt, for C1 cash around about $2 to $2.40. FY production is already ahead of this on a pro rata basis, and cash costs are significantly below guidance. During the quarter, produced around about 6,900 tonnes of nickel and around about 2,800 tonnes of copper for a C1 cost of $1.73. We consistently see consistent operational and financial performance from Nova. During the half, EBITDA was $250 million and EBITDA margin of around 66%. In terms of growth for Nova, focused on Silvernight, which is an open pit resource sitting around about 35 kilometres north of Nova. The plan there is to get that into production so that can substitute Nova feed over the next couple of years. The lithium joint venture photo here shows the Kwinana facility, lithium hydroxide facility. We formed this joint venture with Tianqi. It's a global joint venture which enables us to have a 25% interest in Greenbushes, the world's lowest cost and highest grade lithium mine, and also a 49% interest in the lithium hydroxide facility at Kwinana. We announced this transaction in December 2020, completed the transaction mid-2021. Transaction, we acquired this interest for $1.8 billion or $1.4 billion US at the time. At the time, what it is a global joint venture with Tianqi, capturing everything ex-China, with that 51% or 25% interest in the Greenbushes mine, and then 100% interest in that lithium hydroxide facility at Refinery at Kwinana. At the time we did the acquisition, we were forecasting a US $500 a tonne spodumene prices. Greenbushes is really a world-class asset. We've seen 52% increase in mineral resources, now standing at 360 million tonnes at 1.6 or 1.5, and also saw a 20% increase in ore reserves, which are now 180 million tonnes at 2%. What drives value at Greenbushes is both scale and grade. There's a number of projects that we're looking at. I'll talk about those projects' expansions as we go forward. Once we commit and execute all those project expansions, then we still have a 25 year life of mine. Current production comes from chemical grade processing facility 1 and 2, giving us a volume around about 1.2 million tonnes of spodumene concentrate. We're in the process of commissioning the tailings retreatment project, which will give us another 300,000 tonnes of spodumene concentrate. We're in the process of completing feed studies on CGP3. Which, when we make a construction decision and get into production, will produce another 500,000 tonnes of concentrate. The idea is also to look at CGP4, which will deliver another 500,000 tonnes of concentrating, taking total capacity at Greenbushes up to 2.5 million tonnes. Under that 2.5 million tonnes per annum, we still have that 25 year life of mine at Greenbushes. The lithium hydroxide facility at Kwinana is the first automotive lithium hydroxide facility. We're currently in commissioning phase. We're expecting first battery-grade lithium hydroxide imminent. Challenge for us at the moment has been iron and getting the iron down, and we're really talking parts per billion. So we're expecting that first battery grade. Once we've achieved battery grade, the next step is qualification of the product, while we continue to ramp up the facility to get to nameplate. We've also committed to the partial commitment of construction of Train 2 with $18 million, with the idea of reaching a decision on recommencement of construction of Train 2 in the second half of this year. Capacity at Kwinana takes us from Train 1, it's around about 24,000 tonnes per annum. With commitment of completion of capital or construction on Train 2 will take it up to 24,000 tonnes per annum. We'll then look at Train 3 and 4 They're all staged. The idea of staging is we can take learnings from each of the trains into the different next train. So total capacity at Kwinana can reach up to about 96,000 tonnes per annum of lithium hydroxide. There's a number of catalysts within the projects and significant brownfields growth within this joint venture. Those growths include CP2 and the tailings treatment program ramp-ups, includes the construction of CGP3 and then a decision on CGP4, includes the commissioning and ramp-up of Train 1 and then the recommencement of capital on Train 2, which really takes this into a world-class integrated facility for lithium hydroxide and spodumene concentrate. Another core part of our business is exploration. Exploration is part of our DNA. We have around about 80,000 square kilometres of tenure on what we think is some of the most prospective belts here in Australia. We commit to around about $60 to $65 million per annum on exploration, and it's our lever for continued growth as we fill these supply and demand equations. So in summary, we're a purpose-led organisation with a strategic focus on clean energy metals. We're people-centric. Sustainability is embedded in our DNA. We have a portfolio of high-quality assets with exposure to both nickel, copper, cobalt and lithium. We're building our integrated business linking both upstream and downstream. And we have a continued focus on growth through brownfields projects along with exploration and disciplined M&A. Thank you.